Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, February 6th at about 1:15 p.m. Eastern. Well, Wall Street indexes are rebounding so far today following a bruising sell-off in technology shares through the week, but optimism was tempered by Amazon's drop after it became the latest big tech to ramp up spending on artificial intelligence infrastructure. Amazon slid 9% after the company forecast a more than 50% jump in capital expenditures this year, intensifying the AI-driven spending spree already underway among its magnificent 7 peers. Even so, the Dow made a new all-time high today. The S&P 500 and the tech-heavy NASDAQ are advancing after 3 straight days of declines. So on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, today when I captured this chart right down here, the SPY was trading at $689.23. Now that's still below the all-time highs set last week, right here at $697. So we're still below that all-time high week before last. And it is sitting now, it fell in the last couple of days down below the red line, the 20-day moving average, which is coming in at 690, the 50-day, which is the green line, coming in at 686. And of course, we have the 200-day moving average down here coming in at 645. Now, again, you can't see it on this screen, but we know that since it's April low, the April 7th low, which the SPY made at 481, from there, the SPY has climbed in an uptrend, making higher lows and higher highs all the way up to this October high. And that was at 690, and that was the all-time high in October, 690. And from those April lows to this high was a 44% gain for the SPY, pretty darn good in a few months. After the October high, and you can see that right here, earlier in October, it's like, okay, we're getting tired here. The buyers are getting tired, and some of the sellers are coming in. So we can see that even before this October high, the SPY was getting tired. The rally was showing signs of fatigue, which is totally normal. Please remember with me that the markets of industrialized nations move in cycles. Now you can see little cycles on this chart right here. The big cycles are made out of smaller cycles, and you can see lots of cycles as you move up this this trend. So of course there's intraday cycles if you go intraday on charts. So small cycles make up big cycles, but this big cycle here, by the time it got to the high in October, again up at 690, it just started showing signs of fatigue, which again is normal. So it made this, then it fell back down in November to 652, and right here it was 653 in October. So this was getting to be whoa, and then you can see that price has fallen below the 50-day moving average for more than a day or two, and that hadn't happened previously. It had just been maybe a day, maybe something. But here we've got several days in a row below the 20-day, and here several days in a row before the 50-day. So it's just showing signs of fatigue here. After this low here, it pushed back up, gained energy, pushed back up to 689, then started kind of sidestepping here. And we can see how this trend line can come up here, short-term trend lines, but now it's even getting kind of sideways here. We're just kind of, the buyers are kind of putting their hands in their pockets here a little bit. Still strong, but a little bit of air is coming out of the balloon here. So we have this trend line, this short support line here, actually, where you can see, for the moment anyway, we're staying even. We have resistance right now, nearby resistance at the 20-day, which is the red line, a little bit here at 690. And then, of course, we have resistance up here at the highs at 697. If there's any support here within this candle from the 50-day, the green line moving average, it would be at 686. Then we have down here to 676, this potential support line here. Then, of course, down here to 671, which will go here. If I can draw a straight line, and then down to November lows at 652, and we've got the 200-day moving average coming in here too, again at 645. So next week we are going through more earnings. Not so many tech earnings next week, but we still are in earnings season. Plus we've got jobs numbers, plus we've got the PPI, the producer price index, and the CPI, the consumer price index. Those are numbers that the Fed likes to look at. So we've got to keep track of all that. So please trade carefully. Our next chart is a daily chart of the Invesco QQQ, simple QQQ. Of course, this is the exchange-traded fund that closely follows our NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including large-cap momentum stocks, all the Magnificent Seven, Meta, Tesla, Alphabet, that whole group. Now, when I captured this chart today, the Qs were trading at $608.50. You can see right here, they've come down a lot lower. They were up here. The Qs made a retest of the October highs. See the October highs back here. That took place. The October highs for the Qs here was at 637. They came up to it, as you know, in October, then fell back down, tried to retest it again week before last, and couldn't get over it, and boom, down it came. The Qs have fallen below the 20-day, the red line, the 50-day, the green line, so here, I'm looking at where these lines are. So the 20-day and the 50-day are both coming in right here at 620. Okay, they're both coming in at 620, and of course, the 200-day is down here now at 577.75. So we know that since the Qs made the April lows, everybody made April lows, that was at 402. From there, the Qs rallied and moved in an uptrend a lot of the time over its 20-day moving average from April all the way up to this October high at 637. That was a 58% rally from April lows up to the October highs. From the highs up here at 687, we know the Qs dove down to 581 in November. That's technically, because back here it was like 582 or 3. So technically broke the uptrend with a lower low, but not by enough points to matter, I don't think. Then it rallied back up here to 628 in November. In December, then fell down here to 600, then rallied and has been consolidating. But look, just like the SPY, it's dropping below the 50-day again for a few days here, not rallying right up. So the angle that we had here was really sharp and traveling up, and yes, but now we're getting the buyers are getting a little tired here, and you can see that, and that's normal, and it makes sense. So then it came back up to the 637, fell back down here, and rallied up to where we are today. So yesterday it went down to 594, this low. So then rallied back up to where we are now at 608. And I will tell you, it's good that it looks like the Qs will be closing on the highs today. So that's positive. If that happens, that will be a good thing. So right here, if we look up now, we say, where's it going next? We know that the 620 are both these moving averages coming in overhead, and that could pose significant resistance here up for the Qs. We have that, we have 620, we have 628 right here, again, up to 637. Our support here is down here at 591 right here. We're down here, 591, then down a little lower to, wait a minute. This is 591 up here. Then we've got down here at 581. That's where I was trying to come up with. And down here again to the 200-day moving average. Looking at too many numbers at one time here at 577 and change. So again, we definitely have a wild week ahead. We have a lot more earnings, and we have the economic numbers I told you about a little earlier, the PPI, the CPI, and jobs numbers. So this is going to be a little bit hectic, so please be careful. And again, mind your protective stops. Our final chart today looks a little more calm than a lot of them, doesn't it? Our final chart today is a daily chart of the Invesco Water Resources ETF, the PHO. The PHO has 36 holdings. The top holdings include Ecolab, Ferguson Enterprises, American Water Works, Waters Corporation, and Roper Technologies. Now, before we go on, yes, of course, please know that water is used in AI. You probably already know that. Chilled water is used in data centers to keep those computers cool. So this is one, and of course, I mean, we all have to have water. So water is important. And when the market's as hectic as it is now, you know, I like to wander off into a space that isn't as hectic. And if you're thinking, is Toni not looking at the opportunities in technology? Yes, I am, and I'm keeping a very close eye on the IGV, which of course is the software ETF, and some of those stocks. But for right now, I want to give it a few days next week to see what happens and how it plays out. But the PHO, of course, although it isn't technology, it is now becoming involved, certainly in AI. So that's something. The PHO here, when I captured this chart, the PHO was trading at $74.12. And we know that it's trading, of course, above its moving averages. The 20-day is coming in here. The red line's coming in here at $73 and change. The 50-day moving average is coming in at $72.31, 72 and change. And it's also above the 200-day moving average, which is coming in here at $71. If you could see back in this chart, I looked at the longer term, and you can't. The PHO made its April 7th low at about $57. Then it gradually rallied up to like 73 and change, pulled back, then rallied up here to 74 and change. That was an all-time high for the PHO. Then it fell down to its 200-day moving average, and its November low at the same time, and this is at about $69. Then it rallied back up, and rallied in January back up here, back above its moving averages to retest that prior high at 74 and change. So now we have this picture here, this retest of those prior highs in October, retested again in January, then dropped back down here to the 50-day moving average and rallied up to where we are now again at 74 and change. So this looks interesting to me. and I'm going to keep an eye on it. So if in the coming week the PHO can stay above its 50-day moving average, which is coming in here at $72, okay? If the PHO can remain above $72 a 50-day, I will buy a small position of the PHO in my trading portfolio. I'm going to put in a stop down here at 71.75. If and when the PHO can move above, and it's very close to it, if it can move above this resistance level, these tops here, if it can move above 75, and if it can close above 75, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PHO in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Trade the Trend to Profits, right here. Trade the Trend to Profits. Definitely one of my favorites. Shows you how to take bigger profits out of the market over and over again. You'll learn how to buy a stock or ETF in the early stages of an uptrend and how to manage it as long as the trend is in place. And again, at the right time, when to grab your profits. So again, you're going to be buying low and selling high and doing it all over and over again. And I think that's what we all want to do. Our new low price for this program is only $127. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 Steps to Successful Trading, I know traders love how to swing trade successfully. I loved making it. Again, how to trade the trend to profits, one of my favorites. How to read charts, great for novices or anyone who wants to break up. This is only $59, by the way. 3 running setups, that's $59, and that's for short-term traders. How to bottom fish like a pro, another one of my favorites. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check out these programs by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.